Hi and welcome to StockInvest.us podcast for week 18. Last week was supposed to be green, but Friday ruined everything. Until Friday everything was looking somewhat okay, but Nasdaq fell more than 4% on Friday, bringing Nasdaq down below the support at 12,500. So what's coming next? Are we heading for the real deep falls or will we bounce up? And what about the trading tips last week? There were 5 of them. I told you I would try to go a little bit more aggressive since I thought there was a possible bottom coming up. But the fact is, 4 of them were sold with loss and only 1 were sold in green, and that was Bed & Beyond, and the profit was only 0.3%. But I was very close on Microsoft and Tesla. And Bitcoin not so far off, the same with Dogecoin. Tesla did a little bit worse than what I expected. As usual, we will do the thing that we always do. We will look at the markets. What are the things to look out for this week? Then we will do a quick round of analysis before I will tell you this week's trading tips.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
In this week's podcast, and for a few podcasts forward, you will not be able to see me. The reason is simple. This week they are doing construction in the building where I live. It's impossible to do podcast. So I have to do podcast at the office. And next few weeks I will be in Norway. I'm not sure if I will be able to have camera, but at least you will have the audio version. And for those who follow me on YouTube, of course you will see the screenshots and the charts and everything that I am looking at. Last week I told you I had a fair chance for a green week for Nasdaq. In my opinion, it was that time where things could turn, and everything was going more or less according to plan. It became a very volatile week, just as I warned you. But on Thursday we were up in the green, and then Friday came and Nasdaq and Dow Jones and S&P, everyone took a huge fall. Nasdaq ending week at 12,335 points, down more than 500 points last week, or 3.93%. And it's the 5th week in the row where Nasdaq is closing down. Actually, for the last 4 weeks, it's been around 3, almost 4% every single week. And most people should now really start to feel that in their portfolio. Unless, of course, you've been listening to this podcast where I told you that you have to stay in oil, you have to stay in other stocks that can handle these bad news. Dow Jones did a little bit better, down 2.47%, ending the week at 32,977 points. So what are the things that we can draw from this? Well, first off, Nasdaq broke the support at 12,500 points. That support was very significant, and the reason I gave you that reason last week and the weeks before is that even though if Nasdaq goes up, and it should go up, if it's not this week, it will soon go up, because if we start to look at buy and sell signals, they are extremely low, meaning that we are close to somewhat natural reaction up. That doesn't prevent the markets for continue to fall. I told you that as well. This can easily bring Nasdaq down to 8,000 points, even lower. I've seen this happen before. But that first real thing that had to happen was to see Nasdaq stay about 12,500, because that was a very significant pivot point. Nasdaq broke 12,500 last week, ending at 12,335, as I just said. So no, we know that there is a lower bottom than the previous. And when the upturn comes, Nasdaq will face so much resistance that there is no real reason to say that Nasdaq bottom up. Usually when a market or a stock, whatever it is bottoming up, you see the bottoms getting very, very close to each other. Usually it could be a double bottom or something, but the two last bottoms are very close to each other. The situation that you don't want is that the next bottom is lower than the previous, and the same thing with the high being previous. But we will shortly go to the charts. But before we go to the charts and look at the charts, we'll look at what is up this week. Last week I warned you there were a few things to look out for. It was a lot of Q results. Some of them were very good, some were bad, and some had some effect of market. And we are still in the Q season, because, for instance, after market today, you will have a FANG, Diamond Back Energy, will release results. On Tuesday, before markets open, you will have Pfizer, and after you will have Starbucks. On Wednesday, after market close, you will have Uber. Thursday, you will have Nikola, Royal Caribbean before markets open, and after you will have Virgin and Zillow. Friday, you will have companies like Under Armour and DraftKings. So it's a week full of quarter results. I just mentioned some of those which I think will have some sort of reaction based on this. And that will be the very first tip of the week. If you go to StockInvest.us and you type in the ticker, if we have data, you will also see that we have something called Insider Report. Here you can see what, earnings report, what happened every time the earnings came out. You can read a little bit more, because sometimes these patterns keep going on. If the normal been that the stocks go up the days before Q results and fall the days after, you can somewhat expect the same result. So it's a good tool. Just go to the website, look for earning reports in the tab under the stock that you want to watch, and you can see some good, nice information which we try to display in a user-friendly way. So these are Q results, but I don't think any of them will really affect the market. I'm almost somewhat happy, because last week I told you that for the one thing that you should look out for in these Q results is more the guiding, what they're telling about the future Q results. And I warned you last week that the companies now have to put into their Q results the expectations for the future, where they will tell what effect the sanctions will have. So that was coming up last week. Several companies announced that now they will struggle due to the Russian sanctions, due to the war, due to the inflation. And that took a toll on some of the markets. But it's more interesting what you can expect for the next 3 months, because why should the markets really bounce if we know that all earnings, etc., will start to go down in the forward months? So still pay attention to the guiding. It's the most interesting thing. And some of the stocks put really strong Q results, still falling very hard, simply, as I said, because the guiding, the expectations for the impacts of the Ukraine war, of the sanctions towards Russia, quitting their businesses in Russia, etc., all this we will have to pay a price, or at least the shareholders will have to pay a price. There were other news. There were no really big news about Ukraine war. I think that, again, sadly, we are heading towards a situation where we can have some heavy news. One of these things is, of course, there is a Russian day coming up, a Liberation Day coming up from the Nazis, which many speculate will be the day that Russia will try to declare some sort of victory in Ukraine, which means that they have very short time, and I think that we can see some very negative things in the news during week. Some sort of offensive could escalate, so that Ukraine conflict is far from over. It will be in the back, and it's one of these things that really can tank the market. So if you thought Dow Jones falling 4% on Friday was really bad, I warned you about this coming up, these 3 to 4 to 5% days. Well, I have seen much worse than that, and any day actually you can have that. You just need that very bad news in combination with somewhat bad sentiment from before. And as I will tell you very shortly, there is as low buy signals as I ever seen, and that means that the markets are at a very scary place where things can go so fast up but even faster down. So pay attention to the Ukraine conflict, keep it on your radar, try not to be too deeply involved in the stock market. And that brings me to the second lesson for the week, one that I have repeatedly said to you over and over again for the last I don't know how many months. This is the market where you usually do not want to sit over weekend. You do not usually even want to sit overnight. You go in and out because you cannot control what will happen next day. At least try to reduce your risk to the absolute minimum. Don't be fully exposed in the market. Cash is king. When the market falls, like it did on Friday, falls 4%, then you just buy like I did. I bought several stocks in the expectation that I will have a rebound in the early day today. So even in the morning today, I expect to take back all losses I had last week, simply because most of the stock were totally oversold on Friday. Could be only a few minutes in the opening, 10-15 minutes, I don't know, nobody really know, but it's a very classic pattern, and cash is king in these cases. Go in when everything is really red, because there usually will be a reaction up, but you have to get out, sell in the green. It's one of these tips I've been repeating for ages on this podcast. Buy on red days, sell on green days. That will save you some percentages in the top and the bottom. So we had the Q results. What else is there? Well, on Tuesday and Tuesday and Wednesday, Fed will have meetings. On Wednesday, they will tell something about the interest rates. But we already know that they will have to increase the interest rates. Because the inflation is running wild, they have to do something, and everyone is speculating that it will be 50 points. Yes, it will be 50 points on Wednesday, but the markets already expect this. So I don't see why the market should react super negative when they announce that, yes, we will have to fight inflation and start increase the interest rates. But these are just one of the many things, of the negative things to come, because it will be this interest rate and hike, and then it will be another one, and they will be quite close, and at some point that will really start to hurt the economy, and they will try to avoid a recession, and there will be many things before we turn. I know you might think, oh, I'm so negative, when will this end? Well, there goes my third and my fourth lesson for the day. It's because when everything is as dark as you almost can imagine, then you usually are getting close to where things start to turn. And I believe markets will struggle for some time. I think there will be, as I said, a stagflation, there will be a recession. It will not be a very nice place to be. And the actual bottom, I don't know where it is. I will try to do my very best to find the exact bottom. Where will that exact bottom be? But I'm pretty sure that if you have a long-term view and you start to buy some shares now, buy some now, a little bit later, as you see a market move, you probably in the long term will find this to be a good buying situation. But it can be a long period, can even be years, where markets will not get above today's level. That has happened many times before. Go back, watch at 2000, watch at 2008, and you will understand what I mean. Just look at the charts and you will see. Anyway, these were Fed meetings on Wednesday. These are the real big things. There will be some job numbers on Friday, and as I told you, again, you just have to listen to this podcast. Make sure that you put it as a favorite, so you can see, because I told you, I think by now we will start to see job numbers weekend, and I expect that to be the big thing for May and June. Non-job are increasing, and after summer it will start to be much worse. and you will have unemployment rate rising very fast. On a small side note, I just was told that Lithuania had more than 14% inflation 12 months over 12 months. And can you imagine if you have little money from before, like pensioners and everything, you get a slight rise, and the prices rises more than 14% over 12 months, and they are not slowing down. So this has to hurt, and I think it will just get more and more into the news as well. But we will not dwell so very much long. I was just trying to give you a little background, trying to give you a little insight in the things that you can expect. Let's move more over to the technical picture. And if we look at the buy and sell signals, well, right now only 70% of all companies that we analyze in the world, more than 38,000, have buy signal. Is as low. I haven't seen this low. Maybe during a pandemic time, in the beginning of pandemic time, it was this low. Going to Nasdaq, only 7%, and the New York Stock Exchange 9%, London 20%, Tokyo a little bit better, 24 was the only one going up last week, while Shenzhen China is down at 7, more or less the same like the week before. So Nasdaq, New York Stock Exchange, totally oversold. And usually this will be a super buying opportunity. This is a little bit about how you trade, how you put up your strategies, because most likely we are heading for a very nice bounce up. But will it be this week, or will we go down to 11,000 before Nasdaq finally bounces up? That super hard question, and you just have to be very smart. Try to go into stock that doesn't lose too much. When we get to the trading tips, we'll go back to some of the stocks which I picked, because I thought some of them would hold good even if market fell, and some of them fell 4% over 2 weeks. But when we know that Nasdaq fell just last week almost 4%, so they held up somewhat good, and you just need to have that. You don't want to be too exposed in stocks that will fall 30-40% during a week. You want to be that place where when the upturn comes, you will be in, because they, NIO, Tesla, whatever it is, they will go up 10, 20, 30, 40% in just a few days when things go crazy the other way. So buy-sell signals are extremely low. And what will the chart say? Because now we will try to determine what will this week be like. And if you go to StockInvest, you can type in the ticker Exigam, and you will see the chart. And if we look at the chart, and if you're listening to this on Anchor, on Spotify, or wherever you're listening, just note that we also have a YouTube channel where you will see this YouTube video of the podcast, YouTube version, where I show you everything. And as you can see, that previous bottom at 12,500 is now broken. We have a lower bottom than the previous. The relative strength index is very low. It's 31. It's not oversold, so it's a fair chance that it can continue down. So now we will have to try to find what is the next support level. From technical analysis, we know that 12,000 is psychological level, but there is hardly any trades, and I hope that you can watch this on YouTube as well, because it's so much easier when you visualize. And if you're watching the YouTube now, you will see all these gray bars on the right hand side, all the trades made between 12,500 and 16,000 points at Nasdaq. All these is the resistance. It's an ocean of resistance above. Why in the world should Nasdaq now explode and go up? Has happened before. Of course, the war can end tomorrow. They will find some sort of gold treasure, and the world will just be amazing. The inflation will disappear over 2-3 days. But what are the chances? What are the odds? The chart tells you one very strong thing. It tells you that when and if markets go up, it will face enormous amount of resistance. There will be people waiting to sell out because they are currently in losses. Maybe you are in losses yourself, and you just want to get back to that state where your savings, I told you, don't spend all your savings on stocks. You just want to get back to that comfort level where you had your cash, your amount, and now you are in what, 10, 15-20% loss. You just want to get back, and most people, when they get back, they start to sell because they don't want to experience what they just experienced once again. So that is how resistance work. You see stocks coming out for sale as things move upward. On the downside, there is really no good support before 10,000, and this is sadly the big thing. Everything indicates that we will head for 10,000. There is no stopping as is. At the same time, we are in the bottom of a slightly falling trend in the long-term picture, and there is a slight chance also, because the relative strength index is as low as it is, that we can start to move upward. So I will not be totally negative. What I'm telling you is that given the market situation, with all these very low amount of sell signals, all these negative news that are currently pushing the markets, don't be surprised if Nasdaq falls to 10,000 this week. I would say it will be more or less almost natural. At the same time, don't be surprised if Nasdaq bounces up, even up to 12,800, could be 13,000 on a very strong week. All of this has happened before. The thing is, what we call risk reward is that with all the resistance above, no support below, the risk is not the very best. Trying to make a conclusion, will it be a green week this week, or will it be an extremely red week? Last week I said I thought we will finally have a green week, and I think again that we are very close. I will do the same thing like I did last week. I think it will be a green week, but it's a huge chance that will just continue downwards. That green week may just consist of a few days, very strong days, then we start to head down like last week. Everything was, as I said, looking good to Thursday, then it was falling. It may be the same scenario now. But we are close to some sort of temporary bottom. I'm not sure if it will be 12,000, 11,500, exactly where it will be. But my bet is that by the end of the week, we will be somewhere around 12,500 before we continue further down. In my opinion, there is a fair chance that we will even see the markets getting back up to 13,500 before we have that more long-term fall. We will keep an eye on it for the week as such. I think there will be a green week, but the risk reward is really not attractive. We will do, as we always do, we will have a very quick look, technical look at some of the bigger companies. Last week I told you how I thought both Apple and Microsoft would end, and I was very close. Will I be equally close this week? We will see. And at the very end, of course, you will have some trading tips. I have 3 stocks waiting for you, which I think will do good. They are somewhat different, and I think they might just be yielding some percentages this week. So the market session became very long, but I hope that you understand. I just want to try to give you the background of things, because if there is one thing that I really hope is that slowly you yourself can learn how to read the bigger picture, because everything is connected. Very often as a trader, you focus too much on your stock. And some stocks will, of course, go the opposite of the market. I told you oil stocks will hold very good in this downturn. And you heard me, I invested very good in oil stocks. I started buying when it was $20, saying that this will hold very good. It will hold very good. And it actually has held extremely good during this fall, where Nasdaq been falling from 16,000 points down to below 12,500 points. So overall, I am doing okay. I told you this is the markets where I am doing my very best. Of course, now with the inflation running wild, I also are getting slowly into inflation-related stocks that can hold while markets and inflations are raging. That it will typically be, for instance, food stocks. commodity stocks, there are several things and stocks, companies where you can be when markets are sketchy. Of course, very high priced tech stocks, pure tech stocks. You have Netflix, you have Microsoft. All of these are somewhat of a higher risk in this recession, because just look at yourself. Most likely you have already started to think about your savings. You may even have changed some of your habits. You are maybe going less to cinema. So what will happen with cinema stocks, do you think? Maybe you go less to restaurants. So what will happen with restaurant stocks? Maybe you will not fly this summer. So what will happen with airlines company? You will start your saving process somewhere. And most people do the same thing, and very often this is subscription based. So Zoom, many of these tech things that boomed during COVID will now face mother of all evil. Sorry to say, they will have a hard time, as these stocks are priced for future earnings, which will not come as they think, as people start to save. So that was the background. I would just want you to start to understand the bigger picture, so you can be better at your stock picking. You can be better at understanding why things move, so you don't sell in panic or you buy in too high optimistic, that you try to slowly tune yourself into the moods of the markets, because they will determine whatever happens to your stock. But let's not dwell too much with this. Just listen to my podcast and you will see what I said weeks, months ago. I told you over a year ago, all these things that we see in the market now was most likely the things that would happen, the Ukraine war and everything. I warned you about these things. And the aim goal was always the same. I wanted to try to prepare you for the future, so you can make a somewhat better decision. Last week I told you I thought Apple would end at $160. I had the same target for week 16. Apple actually ending at 157.65 is not so bad off. If we look at Apple, there is two things that I want you to notice. The one thing is that the volume went in the opposite direction of the price. It went up as the price went down on Friday. Having a bottom at 156, I feel that this is almost like a little sell-off. There are support where Apple is today. It has sell signals from the short-term moving average, long-term moving average, lots of resistance above, but I think everything is indicating a fair chance that Apple will hold. The relative strength index is very low, 35. It's not oversold. So the most likely scenario is that there are support where it is today, then it faces a lot of resistance around 163 all the way up to $167. I think that resistance will be too hard. So in my opinion, we'll have a situation where Apple moves up, then start to move down and move sideways. My very best guess is that we will see Apple at the very, very lowest $150 during the week. Most likely it will be between $155 and $165, ending the week somewhere close where it is today. So actually I will keep that same target for $160. But I think that we will see Apple fall below 160 soon, but for the week, just this week ahead of us, I think that is the most likely scenario. And then there is Microsoft, and last week I told you I thought Microsoft would end at 280. Microsoft ending at 277.52 was also very, very close. And we see somewhat the same like we see in Apple. Only thing is that Microsoft has I would say a little bit more defined downwards trend. There is a sell signals from the short-term moving average, the long-term moving average, and even the relation between these two, the death cross, is there. So everything is indicating that Microsoft in the long term should continue even more down. For the short term, there is support at today's level, later at 270. Relative strength index is 40, a little bit higher than Apple. If it breaks below 270, it should fall very fast to 265. But I have that feeling that for the week as such, it will move somewhere between $270 and $290. So there could be a nice swing trade if you are good at it. By the end of the week, I think that Microsoft will end somewhat very close to where it is today. So even for this week, I will keep that same target of $280. And then there is Tesla, and Tesla is the hardest of them all to predict because it's a very volatile stock and move a lot. Last week I was too optimistic at a target of $1,000 while Tesla fell to $870. And if we look at the Tesla chart, we can see that Tesla is within a rising trend. It moved up so nicely from double bottom at $760 all the way up to $1145. Has now fallen to the bottom of the trend, and I think that it will react up. Relative strength index is 31. It was oversold just a few days ago at 28, and I think it's a unique buying opportunity in Tesla. And as you will hear in that next section, which is coming up very soon, one of this week's trading tips will be Tesla, because I personally will go in Tesla again with the expectation at least to see Tesla upwards to $1,000. So in my opinion, there should be some 10%. Sell signals, short-term moving average, long-term moving average, even the relation between these two. So my trade will be just a speculative one, that we will have a bounce up from the bottom of the trend, and that the resistance at 1,000 will be too hard. But I will get back to that shortly. For the week as such, I think that Tesla may fall all the way to 840, but should pick up anywhere where it is today. It's in a belt of good support as is, and just scatter the resistance above, some at 900, some at 940, but the most is around 1,000. So I think if it just managed to get a little traction up, in my opinion, it should move very, very fast upwards to $1,000, and that will yield you some 12-15%. Which will indeed be a very good trade if able to do that. So for the week as such, I don't think 1,000 will be likely anymore for the end of the week, because I think it will be just a few days where it goes up and then it starts to fall again. I will reduce the target. I will have $940 as target for Tesla this week. We will quickly end this session before getting to the trading tips with the Bitcoin and Dogecoin. And I was being optimistic for Bitcoin for a long time. Last week I told you it has to stay above 38,000. That's the main important thing. It's the same thing that we see in most charts. It's at the bottom of the trend. In most cases it breaks up, and that will be lesson number 5, because this is the most general. And if you look at my YouTube now, or if you go to check out the chart yourself, BTC USD, you will see all the times that the Bitcoin bottom. At February it was at 37,000 in the beginning of February, then at the end of February, and later in March 10-12 it was at 37,000. Again it's at 37,000, each time bouncing up. So this is the most likely scenario. But if this is broken down, you will have a huge fall. So you hear me being very positive. I think it will go up. I told you there is so much resistance above that it will be a slow ride upwards. Has to be something very special. There is sell signal, short-term moving average, long-term moving average. In general, all the technical things, except being in the bottom of the trend, are negative. So I believe that there is a fair chance that it will go up. I will keep the target for 40,000, but try to remember this lesson. When these support levels are broken, if they are broken, you will usually have a huge fall. So if 37,000 is broken down, I will not be surprised if Bitcoin fall all the way to 30,000. Many weeks I was pretty sure that we were heading for a very nice upturn, that we would easily get back to the 50s. It was up at 48, but didn't manage to hit 50, and then we would continue upwards. Right now, have to be more modest, saying that the ride up will be slow. But if we manage to find a bottom here, things will slowly get back to more positive. End of the week, $40,000. I expect Bitcoin to be somewhere around the same thing. Dogecoin will just represent all the smaller coins. And last week I told you I thought it would end at 14 cents. It ended around 13 cents. So Dogecoin is Dogecoin. What I like is that the previous bottom is higher. The new bottom is higher than the previous because that was at 11 cents. And I like that volume thing. I told you keep an eye on the volume because the volume thing will start to indicate more action into this small crypto. And I like whatever I see because when volume was peaking, the same did the price. Price was at 17, the volume was peaking. When price went up from 13 to 16, the volume was peaking again. It's a very nice pattern. We like this, and I think that Dogecoin will just slowly crawl its way back upwards. For the week as such, I had 14 cents last week. I will be a little bit more optimistic and have 15 cents for Dogecoin. And finally, that brings us to that very last part of the podcast. It's the trading tips. So we are there. We are finally where we will have the trading tips where money is made and money is lost. And I was on such a good roll, green weeks after green. But since week 14 has been a struggle. I was able to close GTE at 20% profit. That was the best one in week 16. Last week I had 5 trades open and 4 of them were closed in red. 1 was closed in green. And you may ask if I'm somewhat positive for this week ahead of us. Why did I close them? Well, I run trailing stop loss on stocks. I have different levels, and that was the reason why they were closed. It was not my decision per se. It was my decision, but the decision was made by the stop loss, the trailing stop loss. MDRX bought at 22.60 week 14. I told you I thought it would be red weeks ahead. I thought this stock would hold somewhat good in a bad market. It never really managed to go any big up. And last week it was closed at 21.15, giving a loss of 6.42%. ETRN was bought at 8.48, and I told you last week it's very close to being cut by stop loss, and it was cut at 7.99, giving 5.78% loss. So the 2 trades for week 14 are both closed in losses. And last time that happened was in week 3 when Sundal and Netflix was closed in losses. It was the first week ever to close 2 positions in losses. Otherwise it's usually some good nice gains in between. And then there is week 17 last week. I told you I would look into buying MIME, BBY, Bed & Beyond, and Sears Pharmaceuticals. I did that on Monday. I thought I got somewhat good prices. I got Mimecast for $79.80. I got Bed & Beyond for $16.33, and I got Sears Pharmaceuticals for 99 cents. Thought I had somewhat good exposure, different type of stocks. Tuesday started very good. I was on track and everything was looking good. But, you know, the week did not become as wanted. And profit in MIME turned out to be a slight loss because it was cut by stop loss at 79.68 or 0.15% loss. Was up at some 81, if I remember, 82. dollars before falling back. And if you're a new listener and you haven't heard about stop loss, usually if you have a solid broker, you can set stop loss, you can set a dollar amount, or you can use something which I really like is trailing stop loss. It's a stop loss that follow the stocks upwards but never downwards. So if your stock goes up, you have, for instance, $5 stop loss or 5%. As the stock move up, the stop loss also move up, but it never goes down, so it will always be based on the highest price. And that happened to MIME, and that was why I get out of Mimecast with only 0.15% loss. I remember week over week Nasdaq fell more than almost 4%, so it saved me. The same thing happened in Bed and Beyond. I bought Bed and Beyond at 16.33. It was up at 18.19. I was up at least 6-7% profit. Everything was looking very good. But then market starting to fall, and Bed and Beyond was sold at 16.38 or 0.31% profit. So the first two stocks, MIME and BIBE, they evened each other out. A small loss in MIME and a small profit in Bed and Beyond. Sears Pharmaceutical, that was that high-risk stock, penny stock I told you could go both ways. Bought at 99 cents, was up at 102 or whatever it was, and then fell during the week and was cut by stop loss at 0.93 or 6.06% loss. So last week became a red week for me. I bought some stocks on Friday. They are not the trading tips for this week. I bought actually quite many stocks on Friday, which I will just sell in the morning, but that's another story. So what are the 3 trading tips for this week? Well, I think there is a fair chance that the markets will have a natural rebound. I will try to get into Amazon, Tesla, and Amcor. I'm not hunting the biggest. I think the Tesla has the highest potential in terms of percentages, but I think there might be 3, 4, 5% to do in Amazon and Amcor. I will try to get in as low as I can today, hoping, as I said, to see some nice gains. And I will run with trailing stop loss and hope to see they get out green. So these are the trading tips, 3 of them, Amazon, Tesla and Amcor, but there is so many more stocks if you really watch. The thing to watch out for is, of course, as I told you last time, I will repeat this in this podcast, probably repeat it next week, but with so low sell signals, like 7% on Nasdaq, things can go insane fast up. You can have hallelujah in the markets. At the same time, you can have total disaster. It means volatility. It means trading. Try to be structured. Try to be consistent and try to hold back. A good thumb of rule is never be more than 30% invested in a market like this. And me overall, and only those who have followed me so steadily for all this time, knows that I was fully exposed when markets were very low during COVID. I got raked in all the benefits, and as I saw markets topping out at 16,000 at Nasdaq, I started to reduce my exposure and change position, getting more into oil, etc., because I was expecting exactly what we see now. And this is the volatile market where cash is king, because if markets fall dead fast, dead hard, you can be very certain that someone will try to pick it up. And even for just 10, 15, 20 minutes, you can make so good profit if you are able to get in. There are 2 tricks to this, because I promised you also 2-3 podcasts ago that I will start to tell you a little bit when to sell. And this I will do. I will try to make a nice drawing sketch for you, illustration to show it better in a future YouTube video. But one of the things that I use if I want to get out, if I'm not running by a trailing stop loss, because Usually during the week I'm too busy, I have other things to do, a company to run, and occupied with these things. So I cannot follow the stocks. I cannot sit in front of the computer all the time watching the stocks. So I run trailing stop loss, works super for me. It's a super thing. Really recommend you. Sometimes it's hard to find that exact kind of stop loss that you want, because you have to base it a little bit about volatility, so you don't get cut short or too late. But if I want to try to find when a stock is peaking out, where is that selling point, there is one thing that I really like to look at. It's volume. Because if a stock is moving upwards on insane good volume, usually higher than the previous day in average, I just try to see where the volume starts to slow down, because usually that peaks out the interest. If these things, for instance, the stock is, let's say the stock is $140 stock, it starts to move upwards towards 150, volume is very good, and then starts to slow down around 49.50, then I know that the resistance at 150 is maybe too strong, and I will sell with the expectation that the resistance will be too strong and it will fall down. And that volume in combination with resistance is the best tools. I use look at charts, use this accumulated volume, works very well. You just heard me rewind some 25 minutes back. You heard me say this about Tesla. I think because there is very little resistance upward to 1,000, I think Tesla might very well take out that potential, but around 1,000 there is so much resistance. So if not running trailing stop loss, but trying to time that top, well, that is what I'm looking for. Will it be able to break $1,000? Because it will need a good momentum, it will need to push. If the volume is already high, I don't think it will be able to push much higher, and I will sell around 1,000. We will get back to this. The podcast is at the end. Next week, I will be back in Norway for a few weeks, so you will have the podcast again from Norway. But until that, I hope you will have a good week. I hope it will be a green week, that you will be able to cash in. And last but not least, remember, there is more to life than just stock trading. Me, the podcast, Stock Invest, and all the charts, we will still be here. But your time will not be here. So use your time wisely, spend it with friends, enjoy good experience, because the markets, as I said, they will be here and there will be better days. Have a nice week. All the best wishes from me, and we'll speak in just a week. Bye.